A farming property boom. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because we're going to have a talk about the farming property boom. It's not just housing that's going red hot, everyone. It's the farming sector as well. But before we have a look at an article from the ABC, from Landline, one of my favorite shows, I think the best thing to come out of the ABC, to be honest, let's just have a quick overview of the exports that come out of our farming sector. I mean, it's billions of dollars, everyone, of exports shooting overseas. You've got frozen bovine meat. And are they bringing back the live bovine? I hope they do. But, you know how people are. You've got, wine is right up there. Wool. We're exporting more sheep and goat meat than wool. Just to keep that in perspective. Wheat is right up there as well. These are just our exports. This is not even internal consumption. So farming is a big part of the economy here in Australia. It goes hand in hand with mining, one would say. But let's have a look at this farming property boom now that's manifesting. And, well, it's making it harder for first-time buyers to get into the farming market, not just housing. So, just like the residential housing market, Australia's farmland property market is running hot, with a string of recent sales leaving onlookers gobsmacked at the amount of money changing hands. For the past 2 decades, the value of farmland has been on a steady rise, with specialist lender Rural Bank calculating the compounding annual growth rate of 7.5%. That is roughly the same as returns on the Australian Stock Exchange and better than the 4.4% growth on residential property over the same period. More recently, record low interest rates, strong demand for agricultural goods, and a favourable turn in the seasons has kicked the market even further. In March, 179 hectares, so 442-acre block of land in West Victoria sold for $23,588 a hectare, 9.5 an acre. Ararat Elders agent Gary Todd said people were gobsmacked. The price is more than 3 times Victoria's median of $7,500 a hectare in 2019. 3 times the median, everyone. That's just crazy. That is just crazy. What do you reckon? I'm a little shocked. Well, I read these things as I bring them up here. I don't pre-read them. 3 times. Gary Todd has sold farms in one of Victoria's prime agricultural regions for more than 30 years. He has witnessed prices in his patch, which span a 50-kilometre radius around Ararat, increase tenfold over that time. Tenfold. I've got more buyers on my books at the moment than almost the whole time I've been in the game, he said. People are just getting a little gobsmacked. But the thing that surprises me is that as soon as you get another listing, inquiries are through the roof. Further to the east, a property in Victoria's Wimmera region sold for $19,150 a hectare, $7,500 an acre, raising eyebrows around the country. In one of West Australia's prime cropping regions, Ray White Albany agent John Harrington said land around Williams, Darkin and Kojonup sold for around $7,400 a hectare. Generally, farmland prices in WA have doubled in the last 3 years. So we've had a big jump as well, but certainly not $7,000 an acre, he said. Yeah, well, still. Local competition. While large corporate agribusiness investment funds are active in the Australian market, local buyers, especially those eyeing neighbouring blocks, are willing to pay the most. Local buyers are blowing corporates out of the water at the moment, Mr. Todd said. Rural Bank CFO Will Reiner said the fear of missing out factor was observable nationally. So it's not the farmers aren't safe from it, guys. I think there's the realization that there are fewer and fewer properties coming to market in any given year, Mr. Reiner said. People are realizing that they've got to act now because the parcel of land may not be available for a substantial period of time. When the Westchester Group, a major corporate farmland investor, listed an aggregation of properties in southern New South Wales, Henty farmers Kelly Penford and Rowan Barr saw an opportunity that was too good to pass up. We saw the chance to harness both the low interest rate and our equity to be able to make a better investment for the long term, Ms. Penfold said. When analyzing investment options, farmland stacked up better than residential or commercial properties, equities, and investing in a startup business. With lending rates at 2.2%, estimated returns on the land of 4.4%, and capital gains on the property at 10%, the decision was easy to make. So at the end of the day, taking interest out, there's about 12 years of 12% a return that I can be harnessing for future growth or benefit of expansion. Mr. Reiner said across the country, farmers who own land were enjoying the benefits of the reliably increasing value of their biggest asset. I think it's an issue that structurally we need to turn our minds to as an agricultural sector. So while it's great that you've got these appreciating asset values if you already own land, this is no different to housing, is it? For those that are new or emerging entrants into the sector, or those that are going through a succession planning event, it can cause some real heartaches. So dreams on hold. In Queensland's North Burnett region, experienced cattle property manager Damien and Tony Maloney wanted to buy their own farm, but the conditions set by banks, which provide 95% of finance for farm purchases, usually require between a 40 and 60% security on the loan. As farmland values rise, those that already own property can use the rising equity of their own land to fund additional purchases. The Maloneys told Landline it would take them a lifetime of saving to meet the security requirements of a $5 or $6 million loan. It's a huge barrier to have to come up with that type of money. Plus, on top of that, you need to have money for livestock, plant, and equipment to have an operating business. It's very challenging, she said. The couple are working with the Cultivate Farms program, which helps aspiring farmers develop a business plan and aims to match them with retiring farmers and investors. They hope at the end of the journey they'll be able to own their own property, but there could also be the option to lease land at more favorable rates. For us, it's one of our only shots at getting into the industry, and having a property of our own is actually viable, Mr. Maloney said. The Queensland and Tasmanian states governments offer low-interest loans to first-time farmers, while in Victoria, the state government offers duty exemptions for young farmers purchasing farmland. Just think, back in the day, you get the land for nothing when you homestead it. In January, the federal government's Regional Investment Corporation opened up the Agri-Starter loan, designed to assist with conditions, first-time farm purchases, and certain farm succession scenarios. Rural banks Will Reiner believes the issue rising land prices poses for those looking to break into the market needs more attention if the agriculture sector wishes to meet its goal of becoming a $100 billion industry by 2030. If you take a step back and think philosophically, what we want in agriculture, we want a real dynamic industry with real broad and deep sources of capital to invest in it, and we want the best and brightest talent working in the sector, he said. What other avenues are available to us to allow young and emerging entrants to help those that are going through a succession planning event so that they're not relying solely on the land value for security? There's no silver bullet and no single answer. So there you go, everyone. It looks like the regions are not, escaping the challenges of the property sector. It's pricing out first farm buyers, isn't it? So what are the solutions or lessons to learn from this? Buy land, keep it in the family. There's what happens when the existing owners are going to retire and downsize? Will there be a correction in the market, or will big corporations or foreign organizations come in and swoop up the land? We'll have to see. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays. We have pocket squares, or you can get stuff from Teespring. Use Gold Pass from the Perth Mint, or support us via PayPal. Take care. Have a great day. I'll see you in the next episode. Bye for now.